And the crazy part about that is that this is exactly the kind of system the US spent decades warning the world not to copy. This is the model used by China, where the government owns stakes in strategic companies and then uses that as leverage to control their economy. Now, the US spent years saying that this system is unfair, it's manipulative, it's dangerous for global competition.
Not only has China declined to adopt promised reforms, it has embraced an economic model dependent on massive market barriers, heavy state subsidies, currency manipulation, product dumping, forced technology transfers, and the theft of intellectual property.
But now, the US is going to be doing a version of the exact same thing. So, after learning about this, I had a lot of questions like, how exactly is the US government buying these companies, right? Where's the money coming from? And is this good or is it bad? And how is it going to affect investors and our portfolios? And stay for the new investor on the block, the United States. So the first question I had about all of this is, how is the US actually doing this? Like, where is it getting the money to do all of this? So in the case of this stock, for example, Intel, the government converted funding from the CHIPS and Science Act into equity. So instead of just handing out a grant for new plants, the Treasury and Commerce departments negotiated for the shares of the company, about a 9.9% ownership stake, plus the ability to buy more if Intel meets certain production and job targets. So that's Intel. Now, another company, MP Materials, the Department of Defense used a mix of something called convertible preferred stocks and contracts, which guarantee the government access to rare earth minerals in exchange for funding.